Bismillah Rahman Rahim. Hello to all SBR students. A very warm welcome to my another practice question session. And very particular, this session is about SBR September December 24 question number 2, and the question name is Appaniwa company. As you people know that the question number 2, the section A question number 2, it's about ethics as well. It's about ethics as well. So whenever examiner examine the, and it's predetermined, in fact, the question number 2 of SBR, in fact section A question number 2, marks 20 marks, examiner examine with 20 marks, number 1. Number 2, substantial part is about ethics. Like this case, out of 20, examiner examine 10 to 12, means 12 marks with respect to the ethics. And do remember, there are 4 professional marks available with the whole SBR exam. 2 related to ethics and 2 related, that's about section A, and 2 about section B, that's investor perspective. So the investor perspective matter we have already covered with the different exam questions. Here we will also cover, in fact, with different practice question of the ethics as well. I covered the aspect of professional marks as well. With this question as well, we will also cover the content related to the professional marks. In fact, there is nothing extra to write to get the professional marks. Whatever you will write to perform, do execute, do report, do draft in a structured way. What is the structure way? That we will cover here. That's about the ethics. So let's start the question. As usual, the first one is read the question. Reading is an art. So first, the content. Appaniwa company is the parent company of a group, and the financial year end 31st December X7. Obviously, if the student open the question number 2, the student already aware about that this is something with ethics. This mindset you people already have whenever you are attempting the question. But the first thing, the main content, you need to identify the main context. For example, the year end 31st December X7, the exhibits quick one-line statements. That is something about statement of cash flow. Describe the treatment of some transactions in the consolidated statement of the cash flow. So group accounts, consolidation, where it's examined. Group accounts, cash flow, examine. For sure with question number 1, but can also examine rest of the other part of the paper like this. And this point we have already covered before. And here examiner asks something about the cash flows. And so you have established the mind, okay, you have developed the mind, okay, this is something about the cash flow as well. Statement of cash flow describe the treatment of some transaction in the consolidated statement of the cash flow. Number 2, ethical issue. By the way, the question of ethics for September, December 24 with this question, it's very simple, very easy. Although a term reflect here, sustainable reporting. Although it's mentioned sustainable reporting, but still it's very easy. Ethical issues describe ethical issues facing Mr. Lennox, one of the accountant of Appaniwala. Okay. Now, the requirement using exhibit 1, only the exhibit 1, discuss the correct presentation of the following issues in the consolidated cash flow, consolidated statement of the cash flow. The $11.1 million net movement in the long-term borrowings and the high interest bank account. That is about 8 marks. So here examiner mentioned using exhibit 1 only. So that means we can directly pick the exhibit 1 and attempt and save the 8 marks. Because the B part is exclusive about exhibit 2. Or I can say that ethics has, in this question, the ethical issue having no connection with exhibit 1. So quickly read the first content and work out accordingly. Question. It's a very simple question, by the way. It's not very complex. The first point is long-term borrowing. Long-term borrowing. I hope that you people are with me. Long-term borrowings. In Appaniwa Group's financial statement for the year end 31st December X7, the long-term borrowings were carried $21.1 million. Do remember, this is what all about cash flow. And you must be recall the thing about the consolidated cash flow. The accounts, the consolidated P&L balance sheet given, and you have to work out for the cash flows. And here, some rectification of error. So here it's mentioned that 21.1 million reported as a long-term borrowing. This is the long-term borrowing 21.1. This is this 21.1 here. Okay, the following information was extracted. This information very intelligently. What is this information? Can anyone reply me? What is this information? What is this information about? What is this information about? This is a ledger. For example, the bank loan ledger. Opening bank loan, 10 million. That our year end at 31st December X7. So last year end, that's opening balance is 10 million. Receipt and payment is 2.5 million. The ledger affected due to the reason of acquisition of subsidy during the year, 1.5. So 10 million plus 2.5 plus 1.5, that's equals to 14 million year-end balance. 14 million year-end balance. And if I ask you that, if you have already covered the consolidated cash flow, with this bank loan ledger or bank ledger, what is the movement of the cash flow? It's not about opening or ending difference. It's about, we need to identify the cash movement, actual cash movement from consolidated banks. And this is something only the 2.5, only 2.5. That's important. This is only the cash flow 2.5 million. Acquisition of subsidy. Acquisition of subsidy here means you just acquire the subsidy and consolidate the bank account of the subsidy. Consolidate the bank account of the subsidy. This is not the cash movement. The cash movement is only 2.5. Or in fact, with consolidation, our lecture says that whenever you determine the acquisition of subsidy matters, that is not in fact the cash flow. You need to ignore it. You need to ignore it. So it's very simple. The cash flow here 2.5 million, number one. Number two, lease liability. 31st December X6, no lease liability. No lease liability. But here mention during the year some payments of the lease liability. Payment. This payment includes some principals and the interest as well. No impact of acquisition and subsidy. But here the new lease. So that means there is no lease at opening, but during the year, the company involved with the lease transaction. So this is a ledger of liability. 8 million is a start of the lease obligation. And during the year, you paid some 0.9. And year end 7.1. So 8 million liability minus payments, that's 7.1. Before moving forward with the lease liability, only the 0.9 is the cash outflow. So before moving towards the statements or the description, the ledger is self-explanatory. What the cash flow about. But what they have done now, need to read here. A subsidiary was acquired September X7. Subsidiary was acquired September X7. Okay, that's mid of the year. Acquisition date, subsidiary had a bank loans carrying amount 1.5. Subsidiary as a bank loan. So subsidiary as a bank loan of 1.5, that means it's a consolidated matters. But it's not about the cash flow movement. We will not consider this a cash flow. Another point, on 1st January X7, Appaniwa company entered into contract to lease building. Okay, 1st January X7, not at the previous year end. That's start of the year. In accordance with the lease, a lease liability and the right of use asset recognize 8 million. So first entry is right of use asset and lease obligation. So the entry right of use asset debit and lease obligation credit, that means no impact on cash flow. Yes, after recognition of liability, during the year if you pay some amount, during the if you say pay some amount, that's 0.9. That's the payments. Now still we are unaware what they have done. They have given the ledger, they have explained the ledger, but here the last line, that's very much important. In the consolidated statement of cash flows, Mr. Linux reported the net difference between opening closing balance 11.1 million. 11.1 million. This 11.1 million. That's 11.1 million as a single cash inflow from financing activity. So the question about a statement of cash flow and presentation, specifically about cash flow from financing activity. Cash flow from financing activity. Cash flow from financing activity. And what they have done, just take out the difference between opening and ending. That means ending 21.1 and opening 10. And that's called increase in liability. And that's declared as single cash inflow, increase in liability inflow. Is this right? Can you please reply me? Is this right? Can you please reply me? Is this right? Just take out the value opening minus ending. Sir, absolutely not. Sir, absolutely not. That's the mistake. That's the requirement. Refer to the requirement. Using Exhibit 1, discuss the correct presentation of the following issues in consolidated cash flow. The 11.1 million net movement in long-term borrowings. Now the point is that we need to explain the issue. We need to explain the issue and also explain the rectification of error. 4 marks question. 4 marks. So during the reading, I'm expecting that the point you have already developed in your mind. And this is what about the brainstorming quick points. Number 1, here, whatever we have read, now it's time to make a draft. But before make a draft, before writing, we have to develop the mindset. Number 1, netting off. Netting off means opening ending. Movement in the borrowings is incorrect under I7. Very straight statement. First, just start with a straight statement and get 0.5 or 1 mark. It's incorrect. Reference of the accounting standard I7. So just take out the accounting ledger and determine the difference between opening and ending. That's incorrect. So what's the correct? Filter out what are cash movement, what are non-cash. And if non-cash affect to the profit, reverse it. And if it's a part of the cash flow, incorporate it with the relevant activity, either finance, either investing or operations. So we need to filter cash or non-cash. 2.5 bank loan, it's inflow. Bank loan inflow, yes, it's a financing activity. 0.9 lease payment, it's a financing cash. Further, 8 million new lease recognition, non-cash. This is what the brainstorm you have in your mind. 1.5 billion subsidy loan is recognized as acquisition, hit to the consolidated. That's non-cash. I'm not saying you have to write these brainstorm, but make it clear in your mind. I will draft in a simple way. Split the point cash, non-cash and draft it. So what the key points? Straight answer. The very straight answer. Simple. Identify the cash, non-cash means ignore the netting of the cash flows. IFRS 7 requires cash flow from financing activity to show the gross, not the net. Gross means 1 by 1 gross by separating non-cash changes. So net 11.1 is a single cash inflow is incorrect. So first is very absolute and split the answer in 2 parts. Cash flow that should be presented as financing activity. Park 2 marks. That's bank loan, yes. Lease liability, yes. Lease liability payment includes principal and interest. Non-cash, no statement of cash flow. Okay, make a disclosure, it's a separate thing. Make a disclosure means it's a non-cash item, it's a part of the ledger. New lease, 8 million, non-cash exclude from the cash flow. Okay, part of the reconciliation. Reconciliation means ledger. Loan assumed to acquire 1.5 on consolidation date, non-cash. It's no place at cash flow. Okay, you mention with the acquisition of subsidiary as reconciliation. And finally, if you need to make a single word present, straight one-liner presentation or one-liner statement, it's optional, not necessary. Financing activity should be 2.5 million inflow, bank loan, 0.9 million outflow, lease liability, but the new lease and acquired, new lease 8 million and 1.5 acquired loan as acquired of the subsidy is a non-cash, appeared only in finance and liability reconciliation, not the cash flow. Student, can you please apply me? Is this clear to you? How you will draft the answer? Draft the answer in a very simple way like this. Is it necessary to make heading? Not necessary. Not necessary. You have to plan your answer. First line about they are wrong. Netting of it's not allowed according to I7. What's the correction? Mention what are the cash flows. That's bank borrowings and lease liability payments. What are the non-cash items? That's new lease recognition and the loan from acquisition. That's the point. Can you please apply me? Can you please apply me? Now the another point. Now the another point. Okay, there is a question. Should we answer in a bullet points? Students, I strongly suggest that you don't make answer one by one bullet points. Instead of make a small para. Small para means your ideas. One para, one idea. That means you can use these as one para. This is I can say that this is not exactly the bullet point and not exactly the detail para, because here only the 4 marks available. Only the 4 marks available. 1 mark easily parked to identify the error. Rest of the 3 marks is about what is this about? What is this about? Means number 1, what are the cash flows items? What are the non-cash flows items? Straight. Whatever the method you use, make sure your answer must be completed. Concise, but don't ignore any important point. Your answer must be completed. All points need to cover. Is this clear? The answer must, one statement, the answer must not be 100% bullet. Must not be written with 100% bullet. The student who asked the question, please do reply me. Is this clear? Okay, another point. Before moving towards the next part, sir, we heard that the IFRS 18 also impacts to the cash flow. So this is September, December 24 question. So is there any changes at the changes of IFRS 18? Is that any impact with that particular question? No impact, except no impact, except the name. Actually, there are a lot of issues about the IFRS 18 that we will discuss or cover later part. But the point is that some points you need to cover here. A little bit aspects. Number 1, the cash flow, although it's not about the operating activity, cash flow from operating activity, there's a statement called cash flow from operating activities. No? So a statement of cash flows now use the term cash flow from operating activities before income taxes. But this point we will discuss later as well. Something about here we are working with, here the question asks netting. IFRS 18 is more concerned about disaggregation. Means you have to isolate the things. Entities must be distinguished, cash versus non-cash changes. So this question is not affected with IFRS 18 point. Don't worry about that. But what exactly about IFRS 18? Don't worry, you will get the lecture. Don't worry. Now next point. High interest bank account. High interest bank account. High interest bank account. Another point. Very simple. On 1st November X7, Appaniwa company $4 million into high interest bank account. Okay. Appaniwa company cannot withdraw the funds before 30th April X8. Before 30th April X8. And they took the loan 1st November X7 and now 31st December X7. And now 31st December X7. So from 31st December X7 till 30th April, it's approx 4 months. 4 months, next 4 months, it's not possible to withdraw the funds. They have high interest bank account. Okay. The money in this account has been treated as cash equivalent in the consolidated cash flow because Mr. Lennox believes the bank would release the funds early if Appaniwa company was suffering from liquidity issues. Do remember, the making of the financial statement, the recognition, measurement, presentation is not based on the wishes or the intention. It's about the rules that's available with the accounting standard. Here, cash and cash equivalent. If Mr. Lennox believes bank would release the fund early and report as cash equivalent, so we need to filter. We need to assess that either this meet the definition of cash equivalent. By the way, what do you say? Can we consider this bank deposits as cash equivalent where the company has restriction by next 4 months? It's not, the company will not be able to withdraw. Absolutely not, sir, because cash and cash equivalent having a definition which we should draft. The cash and cash equivalent, if any of the asset account we need to declare cash and cash equivalent, that deposit account must have to meet 3 conditions. Number 1, it must be short dated less than 3 months at the date of deposit. Highly liquid, that's readily convertible into cash, and insignificant risk. All 3 conditions must have to meet. So number 1, from the acquisition, the time period is 6 months. Conditions. First condition, it's not meet. No contractual right to early withdraw. Another one. Okay, insignificant is, it's okay. But based on these 2 points, that fails to meet the criteria of cash equivalent test. So if it's not the cash equivalent, so what the right way to treat it? You have to report that particular bank deposit account as investing activity, and any interest received report as investing activity. So this is what about the brainstorm? This is 3 to 4 marks. First, easily start with the definition. Listen carefully. The definition is not the bullet point. You can consider a bullet whenever you type, but it's actually a complete sentence. Cash and cash equivalent means I7 defines cash equivalent as a short term, normally less than 3 months, highly liquid investment and readily convertible to no amount and having an insignificant risk of the value. If these conditions meets, that's called the cash equivalent. Start with basic definition. Application here. Whatever the brainstorming point above, we have to work out with these 2 points. Apply with Appaniwala and mention that what should be the correction. Is this clear? Is this clear? Can you please reply me, students? Okay, before moving towards the ethics, let's take 2 minutes break. 2 minutes break. Okay, students, are you hearing me? Are you able to hear me? Okay, let's start. Let's start. Appaniwa company, and this is about part B. Part B. I think that this question is a very straightforward question. Although a terminology used here, and in fact, a question part as well, that is sustainable reporting. But still, I say that it's a straightforward question. We will read with this session, we will read the question in a manner how to develop the mindset about the case, then brainstorming point about the ethical issue and the drafting, and then the right way to draft the answer to get technical plus 2 professional marks. This is what the objective in my mind. So we are ready, huh? So you people are also ready, huh? Let's start. So the question is, using exhibit 2, discuss the ethical issue and discuss and the actions which Mr. Linux should take to address this. Students, this and is very much important. There are two things that need to focus here. Not only to identify the ethical issue, not only to identify the ethical issue, but also have to recommend the actions that should be taken by Mr. Linux. So let's start the reading. Mr. Lennox is an ACCA member, okay? Ms. Ruiz, the finance director and ACCA member, is his immediate line manager. Ms. Ruiz has ordered Mr. Linux to produce Appaniwa Group Sustainable Report in accordance to IFRS Sustainable Disclosure Standards. Mr. Linux has never produced a sustainable report before and unaware of the content of these standards. That's the first point. And I must say here, this is the only issue of the sustainable reporting. With this exam paper is published, one more question available with section B that's very much in deep about sustainable reporting. Kimi Mila company. But here, the same exam semester exam paper published by ACCA having the sustainable reporting issue, but not more than that. It's only related to ethics. That's manager intimate or pressurizing to the subordinate Mr. Linux to prepare the sustainable report. And even though Ms. Ruiz also aware that Mr. Linux has never produced a sustainable reporting. So we just need to connect this point with ethics. Means what's the ethical issue? Ethical issue means what the threats here, and that threats compromising the ACCA or ethical principle, ACCA ethical principle or the professional accountant ethical principle. And number two, what the action point should be there. That's the point. So first thing, number two, after correcting the errors outlined above, after correcting errors, Exhibit 1. Mr. Linux sent the consolidated. Mr. Linux sent the consolidated statement to Ms. Ruiz for review. As part of a review, Ms. Ruiz has made several changes. So the second issue, Ms. Ruiz made several changes. Mr. Linux believes that Ms. Ruiz has understated foreign exchange loss adjustment. This is a part of Exhibit 1. There is no connection of Exhibit 1 here. You can consider Exhibit 1 having errors as well. But here, some deliberate errors, understated the foreign exchange loss adjustment in arriving at the cash flow for operating activity. Hence, also understated dividends paid by 2 million. Oh, two blunders. Deliberate. That's a deliberate adjustments. And I must say that's manipulation. Concern of integrity. Threats about accounting issues affect to the principal's integrity. These combined errors have no impact on net cash outflow of the operating activity. So what? No impact on the net cash outflow. So what? But you are actually hiding some points. The intention is different. Mr. Linux is aware that Ms. Ruiz is a major shareholder. Oh, Ms. Ruiz is also a major shareholder in Appaniwa company. And because of current liquidity crisis, the company facing the liquidity crisis, he has concluded that she wants to conceal from third parties the extent of her dividend. So what the intention behind to deliberate manipulate the accounts, it's very clear. Conceal, and it's very sure that's action compromising. That's issue will compromise the principle of ethics. Conceal from third party the extent of dividend. When Mr. Linux previously questioned Ms. Ruiz about some of her decision, she threatened to dismiss him. Another concern, intimidation. Again, threat, intimidation, pressurizing, compromise integrity. This is a very straightforward case. Now, the point is that what are the steps that we need to follow to become able at the examination point to draft the answer, not able to get technical but also the professional marks. So students also remember three steps. Number one, first of all, don't think about the solution. First, with ethics case, first of all, shape up your mind. That's what actually happened with the case. That's the key point. So first thing is about develop your mindset. Don't write in anywhere. Develop your mindset in a summarized way. That's what happened with the case. Within the mindset, don't think first. The first step, what is happening in the case? The case is number one, who two members are involved. Mr. Linux, working in the finance. Ms. Ruiz, finance director, ACC member, and also a major shareholder. The case is about sustainable reporting issue. Finance director pressurizing or tells to subordinate to prepare sustainable reporting, even that no experience with the standard. This is the problem. Ms. Ruiz tells Mr. Lennox to prepare sustainable reporting. This is not problem. Problem is that Mr. Lennox has no experience of these standards. So problem is the risk of poor quality and incorrect reporting and reporting to the user of the financial statement, misguiding. So first step, don't think about solution. First shape up what is the issue here. And after fixing earlier errors, that's issue. Exhibit 1. Mr. Lennox sent consolidated to Ruiz and she deliberately changes. That's called misleading. Understate the foreign exchange loss, understate the dividend. Why she's doing that? Is this something mistake or deliberate? Why? Although the net cash flow become it's nullify, net cash flow effect nullify, but actually hide the truth about the dividend payment. And she's a major shareholder, concealing the dividend with liquidity crisis. The company already having the short of cash. This is what about power imbalance. Mr. Lennox already questioned Ms. Lewis, but she threatened to fire him. That's very much important about the ethics. What the first step you need to follow? Shape up your mind what actually happened in the case. First step, don't mix with the ethics or the solution draftings. Very clear and short, Mr. Lennox is being asked to do work, sustainable reporting, but he's not competent. He noticed potential manipulations based on personal interests and also faced the pressurizing, intimidation. That is what about the case. So make sure the step number 1 is about you have very much clear about the case. And believe me, if you do this step, you easily get at least 2 marks. At least 2 marks. I'm conservative on 2 marks. If I adding some professional marks, it's between 2 to 3 marks. Based on this, you just start your question. The very first para. Your answer based on 3 parts. Number 1, you have to present the first para always about. The first para always about. What's the problem? What's the problem here? Simple in your own verdicts, no solution. What's the problem within the case? Mr. Lennox has been asked to prepare Appaniwa sustainable report IFRS S1 S2 but lacks experience, creating competency gap and risk of producing misleading disclosure. Straight, the first point, 1 mark. Separately, after review, the Ms. Ruiz, finance director, major shareholder, the consolidated statement show understated the foreign exchange loss and the dividend. Given her shareholding and liquidity pressure, these edits appear intents to conceal dividend and also threatened for the dismissal when questioning her potential additional ethic and practical constraint. What the very first thing? Read the question carefully. Ask yourself, what is about the case? What is about the case? What is about the case? And move on the first para and save your 1 or 2 marks. Can you please reply me? Is this clear, everyone? Is this clear, everyone? Is this clear? Now, the second point is about the brainstorming. Brainstorming the core points. The brainstorming the core points. Students, here I will take 10 to 12 minutes break for my prayers. Okay, 10 to 15 minutes break. 10 to 15 minutes. Take a break. Thank you very much. Okay, can you please reply me? Are you people in the session?